A marginal pullback, but we did have quite a nice rise in March, and it looks like we're holding on to these levels.
Yes, good evening, good afternoon. I think it's great numbers. I think it all together tells us that there's momentum in the numbers, there's momentum in the sector. If you look at the business activity, that's positive. If you look at the order book, that's positive. And even if you look 6 months out, the expected business conditions, that's still positive. So from the numbers that tells you what's going on in the manufacturing sector itself, that's positive. One can even add the inventory number. Now the inventory number is picked up, but it also tells you that there's underlying positiveness about the momentum and the strength of it. So if you look at the inventory number, what we are seeing, that we're seeing that the manufacturers are actually, they have enough confidence to maintain this, that they are building up the inventory. They're actually increasing the rate at which they're building up inventory. And I think that shows you that there's underlying confidence in the sector.
But they don't have enough confidence, it appears, at this point to start hiring people, because we still have that employment index sitting below 50.
Yes, below 50 is almost that you're in a retrenchment mode as opposed to a employment or extending job opportunity mode. The point is, for the last 12 months, we've only had 1 month, February, where we were above 50. So for the bulk of the last 12 months, since May 2010, the sector has, in effect, was in a retrenchment mode. Now, if you look at the official numbers from the official employment numbers, we are seeing that the sector is employing some jobs, but we're not seeing that we are getting the jobs going in terms of the jobs that we lost. We're still negative on a net basis. So the opportunities we lost during the recession, we haven't been able to employ those people. So in the end, that is negative. And I do believe that it is time that we look at it and we start to ask serious questions about the possibility of a structural issue. That structural issue could be that there's certain jobs that we needed, perhaps more skilled jobs that are needed, perhaps there's a labor issue, perhaps there's an issue of mechanization. But we need to look at that carefully, because the rest of the numbers are nice and positive, the momentum is shown there, and even the confidence to such an extent that we're seeing a build-up of inventories. That's there, but we're not seeing the employment side coming through.
Do you think that could partially be due to the changes to labour legislation which are in the pipeline at the moment? Because chatting to labour analysts, they say this has created uncertainty in the workplace, and companies may be very loath to hire many people that they may not be able to retrench in a further slowdown later on.
Look, I'll be very careful to say that there's one specific issue. I think it's a whole lot of issues. That might be an issue. The labour legislation certainly does play a role when you make decisions as to employment. That might be a role. The kind of skills that's required, that might be a role. The fact that we are seeing tremendous cost pressures. I mean, if you look at the input cost side, yes, that was slightly lower than the previous month, but that's still very high. We have PPI running at 6.3, 6.4%. That shows you there's cost pressures. It might be that one of the costs that you're careful to incur is labour costs. So I don't think there's one single element. I think it's a basket of elements, but that doesn't mean that we need to look very carefully at those elements. And if we want to achieve the targets that the government has set, which I think everybody agrees with, that is a priority, we need to create jobs. If we want to do that, we need to look and take cognizance of the fact that that the manufacturing sector is building momentum but not employing, and we need to get behind that.
Now, let's talk about those cost pressures, because that's something that we've seen across the globe, where they all are seeing those rising cost pressures, mainly due to rising commodity prices and particularly the oil price. And that's something that's going to stay with us for some time, isn't it?
Well, we kind of sheltered from that because of our strong currency, but that might not necessarily always shelter us from it. So the cost structure is nothing to do with South Africa. It's international. We see high commodity prices, high input costs, and that is working its way through the manufacturing cycle. Now, that will lead to higher cost of manufactured goods, specifically from the manufacturer side. Now the question is, will the manufacturing be able to pass that on to the consumer, which will then result in consumer prices, in that pressure on consumer price inflation? Or will there be a portion of margin squeeze, which might tell us that the manufacturer's margins might come under pressure? So the question is, if your input cost is rising at a strong level, and the expectation is that this is going to continue, what is that going to do to your margin? And what extent will you be able to pass that on?
Are you surprised at how well the PMI has done, given where the rand is? We've got it trading around R6.60 at the moment. And obviously manufacturers looking forward, we know that the rand is likely to remain around these levels, maybe weaken a little bit, but 6 months hence, you're still going to have that strong rand, and yet they are still confident.
Well, they're confident 6 months out. Even they're confident today and 6 months out. So obviously one will have to then look at where the market is for the manufactured good. goods, to what extent is that going overseas? To what extent do they have the advantage of a strong rand on the input side? But also to what extent is the local market taking up those goods? And remember, a major portion of the manufacturing industry is things like the motor vehicle industry, and we're seeing sales, international sales, still growing extremely strong, even with this rand. So one will have to start to ask the question that the idea of a weaker rand, almost a plug and play for the manufacturing side, that's not strictly true. There's other factors as well that one has to put into the mix.
Now, our PMI out today slightly at odds with the numbers we've seen coming out of the UK, also out of China. That came in a little bit disappointing, so heading back towards that 50 marker. Are you surprised that we are backing the trend here?
Look, we are bucking the trend in terms of the fact that we're still well above 50, but we were lagging it when everybody else was picking up. So the fact that...
So perhaps behind the trend a little.
And also, I think we haven't seen any indication that the problems in Japan had any impact on our supply chain. Remember, in a lot of the countries in the world, in the ammonia manufacturing side, the tsunami, the earthquake followed by the tsunami, had effect on the manufacturing side, on the component side, and on the supply chain. We haven't seen any signs of that. That doesn't mean we're not going to see any signs, but at this point, we're not experiencing any signs of that, which you might see might be a factor in some of the other numbers.
Theo, just looking perhaps at where the PMI is now, where it's been historically, where would you expect it to trend to if we don't have any big shocks in the system?
Between 55 and 60, I think that's a fair, nice, high level. We are in that band, and that's where I think we should, in the long term, we want to see the band.